Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in Berlin after one of the most consequential elections in Germany's history. We have a great lineup of guests to help us unpack the election results. At 6:10 a.m. UK time, we're going to be speaking to Jeremy Stretch, the G10 FX strategy head at CIBC, joining us for his take on the markets. Jari Sten, chief European economist at Goldman Sachs, will be with us at 7:30. Later in the morning, we're going to hear from the IFO or IFO president Clemens Fuest and the DIW president Marcel Fratscher. But first, here are the stories that set your agenda. Germany's Conservatives win the federal election, with Chancellor Olaf Scholz's party suffering its worst defeat since the Second World War. CDU leader Friedrich Merz says he will form a coalition quickly to get the economy back on track.
The world out there will not wait for us, and it will not wait for lengthy coalition talks and negotiations either.
Trump's China salvo. The US president targets Beijing's spending on tech, energy and strategic sectors, all with the aim of cutting China's trade surplus. Plus, as the war in Ukraine enters its third year, Donald Trump's top advisors decline to describe Russia as the aggressor. Volodymyr Zelenskiy says he would step down as Ukraine's president if it guarantees peace and NATO membership. So Germany's Conservative opposition leader Friedrich Merz says he will move quickly to form a new government. That's after his centre-right alliance won this week's election, but with a result that will require him to forge a coalition. The preliminary tally showing the CDU-CSU bloc finishing ahead of the far-right Alternative for Germany and Chancellor Olaf Scholz's Social Democrats. You can see the gains made by each party here. Merz's alliance won 28.6% of the votes, followed by 20.8% for the AfD. The SDP finished third with 16.4%. Merz has ruled out an alliance with the AfD, but he could form a two-way coalition with the SPD and would not need the Greens to make up the numbers in the Bundestag. Here's what the leaders of each party had to say following the results.
We ran a very tough election campaign. Nevertheless, this election campaign was really necessary. Also in the debate about the important and major issues of our country, about economic policy, migration, foreign and security policy, and internal security. But now we will talk to each other, and the most important thing is to re-establish a viable government in Germany as quickly as possible.
We have doubled our votes. They wanted to cut us in half. The opposite has happened. And I must say one thing. Our hand will always remain outstretched for participation in government to implement the will of the people, the will of Germany. We are ready to participate in government.
It's a bitter election result for the SPD. It's also an electoral defeat. I think that, given the election result, this needs to be said clearly and explicitly at the outset.
Well, let's check in to the market reaction to a rewriting of the political landscape here in Germany. Euro is up. European futures gaining as well. The euro currently gaining 0.5% at 105 for the single currency. This is a grand coalition that is likely now. And the top line, and there's plenty of nuance, the top line is that is market friendly. Big questions, of course, about the debt brake, given that they do not, it seems, have the two-thirds majority to make that change, at least not easily. DAX futures pointing to a solid session as well, looking to gain 1.1%. Of course, German equities, the DAX is already at record highs and looking to build on that in the session today. Bunds pointing lower. There's an expectation that there will be further fiscal spending, of course, and that could mean higher yields when it comes to German debt. Gold gaining just marginally at 2,937, still grinding higher towards that 3,000 level per troy ounce for the yellow metal. Let's flip the board and have a look at some of the other movers when it comes to asset classes this Monday morning on the back of these results, of course. Let's change it up and see how US futures are pointing. Currently, US futures, I'll tell you, are pointing to gains of 0.5% after dropping around 1.7% by the close of play on Friday. Some of the services data coming in much softer than expected. On the earnings front, Nvidia front and centre, those numbers dropping on Wednesday and could be a key catalyst, of course, for these markets. Now, Friedrich Merz says he will move to form a new government within 2 months. However, with the CDU winning just less than 29% of votes, he will need to assemble that coalition. Unsurprisingly, of course. Here to discuss the potential options for Friedrich Merz is Bloomberg's executive editor for Europe, Chad Thomas, who hasn't had much sleep and has been following all this at a granular level, of course. Chad, what are the options right now facing the likely incoming Chancellor?
Well, Friedrich Merz's path to power got very clear overnight. There were a bunch of smaller parties that could have gotten into the Bundestag. They did not. So what we know this morning is if he wants to form a coalition quickly, his most likely partner is with the Social Democrats. Those two parties together now, based upon the final results that we have, they would have enough for a majority in the Bundestag. All other paths to power get really messy. He said he won't go into a coalition with the AfD, so you cross that off. There really aren't many other options left. The funny thing for the Social Democrats here is all of a sudden they have a lot of leverage in the negotiations because they know that Friedrich Merz needs them to form a coalition. I say funny because they actually had their worst result, as we've been talking about for the last 12 plus hours, their worst result since World War II, and yet they are in a position to actually demand quite a bit going into a potential coalition because they're the only partner he has.
So they have that leverage, the SPD, despite, of course, getting just about 16% of the vote. Where does it leave the AfD? It's worth reminding our viewers, this is the best electoral haul that this far-right group have had since their foundation. More than 20% of the vote, it seems, for now. Where does it leave the AfD at this point?
So at this point, in terms of their ability to affect policy, they didn't get to a blocking minority. They would have had to get over 30% in order to do that. But obviously, they have already been affecting policy given how the voters have shifted to the right. I was looking this morning, what were the top concerns for voters? The main thing was safety and immigration, and the second thing was the economy. So these are some of the things that the AfD has been talking about. And obviously the parties, many of the parties have already moved to the right. So even though they won't be able to push through policy, they're affecting the decision-making of the rest of the parties in power.
And they're gearing up, of course, to see if they can win the chancellorship at the next election. They've been pretty clear on that journey and that route that they want to take.
That's right.
When it comes to the debt brake, Chad, how should the markets interpret how close we are to reform of the debt brake this morning?
So at this point, there is actually, I said the AfD doesn't have a blocking minority on its own. The AfD and a party on the far left together, in theory, have that blocking minority. So the parties in the center, basically to change the Constitution, you need a 2/3 majority. The parties in the center do not have that in the new Bundestag.
That includes the Greens.
That includes the Greens. So the Social Democrats, Greens, and Christian Democrats together, they don't get to the 2/3. So they can't on their own change the Constitution without one of these other two parties that have made it into the Bundestag joining them. What they can do with the debt brake, though, and it's important to remember, is they can suspend it for a year and say we have an emergency. We need to spend more money to help Ukraine. I think that's going to be the most likely outcome. They will set up some sort of special defense fund. We saw that when the war started. They did something similar. So while they will be unlikely to reform the debt brake, because that's a constitutional amendment, they will likely be able to suspend it. And I think it's likely that you will see them do that.
Chad Thomas, Executive Editor for Europe. Excellent analysis. Thank you very much indeed on where things stand. We continue across the German story, of course, and the market implications, because traders are hoping that Germany's election outcome will, of course, see a pivot towards increased spending and reforms, with all the caveats, of course, that Chad has just outlined to us, that could reboot that stagnant economy. 2 straight years of contraction. Let's dive deeper then into the market reaction with Bloomberg's Valerie Teitel. And Val, there has been a market reaction. DAX futures pointing higher, euro gaining.
That's right, Tom. A market-friendly outcome of the German elections. A clear winner, a two-party coalition likely to be formed, and those two smaller parties just came shy of that 5% level to get representation in the Bundestag. That is pointing to risk on when it comes to German equities. DAX futures up 1.2%. At the moment, we are shrugging off any concerns about the debt brake because those mainstream parties have fallen short of the two-thirds majority needed to reform it. But it seems like positivity in the equity market, positivity in FX. We flip on, just check how the euro dollar is trading. We crossed the 105 handle just overnight, trading quite strongly, up 0.5% at the moment. And this level is important, Tom. We flip on, we can just check how the 100-day moving average. We are on the verge of a breakout for a stronger euro. We've tested the 100-day moving average once before a few weeks ago. We failed there. We're testing it again. The 100-day moving average is at 105.40. That is a key level to watch for a further breakout of euro dollar.
Okay, watching that 100-day moving average for euro-dollar, which is currently gaining, as you say, in the session. Valerie Teitel with a market reaction. Thank you. Now, Olaf Scholz, of course, the current but outgoing Chancellor. Social Democrats had their worst, that's his party, of course, had their worst results since World War II. Worst results since World War II. He signalled that he will not take part in the coalition talks with the CDU, with the Conservatives. For more then, let's bring in opening trade anchor Kriti Gupta in Berlin. Kriti was on the ground with the SPD as the results trickled through yesterday. Talk us through what this means for the Social Democrats and Olaf Scholz.
Well, a wave of dismay was the initial reaction, of course, when the 16% number came in, because there were so many people in that jam-packed headquarters of the SPD expecting at least 20 or higher. We, of course, had that worst result since the World War II. So not only a wave of dismay, but then ultimately a cone of silence. And that was kind of the mood that you heard at the SPD, only for the mood to completely turn around by the end of the night as we start to get the results from the other parties that came in below 5%. The FDP was one of them, given that the SPD kind of had that falling out with the FDP and Christian Lindner around the debt brake. So as you saw those numbers come in and the polls get closer and closer to fall below the 5%, cheers in the room, which I think really encapsulates the mood of the SPD right now. They're realizing, as Chad said earlier, that there is this element of control and there is this element of negotiating power. The question is, where do the coalition talks actually begin? And that's where the SPD is kind of throwing their hands up in the air and saying, it's Friedrich Merz's turn. Okay, the alphabet soup is there with us as well, isn't it, with the SDP, the FDP and the CDU, but the Conservatives and the Social Democrats. So talk to us. What is next then? You've been talking to members of this party, the SDP, who had, of course, been part of the governing coalition, had been the leaders within that. What is next for the Social Democrats, given the shellacking that they faced yesterday? Well, now it's coming to who is the party leadership, and that was something that was very clear yesterday. Olaf Scholz taking the stage, taking full responsibility for the results, and really saying that he gave it the best trial he could. The party leaders coming out and saying the same thing, that he's given it his best shot, saying that he fought like a lion, really to the death, a lot of kind of that kind of imagery really being used. But now you're starting to see party leadership change, and that was something that was talked about at the headquarters last night, this idea that perhaps Boris Pistorius, that was the name of the night, who's currently serving as the Minister of Defense, perhaps taking a bigger role when it comes to the leadership of the party, not only for the party, but perhaps a cabinet position, if indeed that's where Friedrich Merz decides. But remember, this is crucial because it comes at a time when you do have a lot of conversation about how Germany fits into the defense structure. And that's been something that's changed really only in the last 2 weeks, given whether or not Germany wants a seat at the table when it comes to negotiations in Ukraine, whether it comes to the NATO presence. We know the United States has a big military presence in Germany as well. And does this mean that they have a bigger kind of seat at the table when it comes to the entire European Union? That's the question when it comes to Boris Pistorius. But he's not the only one we want to talk about. Jörg Cookies is another. He, of course, is the acting finance minister. Take a listen to what he had to say about the future.
Unfortunately, at this point, we're still in the world of speculation when it comes to possible and potential coalitions. As long as it's completely impossible to predict who will have coalition talks, the future of a minister of an outgoing government is also impossible to predict.
Jörg Cookies there, the current finance minister, and of course one of the key folks trying to really get some loosening around that debt brake. It is crucial at the end of the day for the markets whether or not we get that. And even though Friedrich Merz is talking about, say, 2 months of a timeline of forming the government, a lot of people are raising eyebrows whether Jörg Cookies is going to be a part of that equation. Okay, Kriti Gupta, thank you very much indeed. With the prospects for the SPD, the Socialists going forward, who could, of course, be key partners within that grand coalition. Thank you, of course, anchor of the opening trade. We have a great lineup of guests to help us continue to unpack the election results out of Germany, the impacts, of course. 6:10 a.m. UK time. We're going to bring in Jeremy Stretch, G10 FX strategist.
at CIBC, more like 6:17 at this point, for a take on the markets. Yeri Sten, meanwhile, Chief European Economist at Goldman Sachs, will be with us at 7:30. And later in the morning, we're going to hear from the President of the IFO Institute, Clemens Fuest, and the DIW President as well. We're also going to be speaking exclusively to the CEO of Prosus and Naspers, Fabricio Bloisi, at 6:40 a.m. UK time. Do not miss that conversation. This on news around a deal involving Just Eat. We'll bring you the details on that, of course, in the next few minutes. That interview, though, coming up at 6:40 a.m. UK time. Stay with us. Plenty more coming up. This is Bloomberg.
We do have a very clear mandate. Friedrich Merz will be our next Chancellor in Germany. Olaf Scholz is done. And that's the good news of tonight. And we're going to change course of Germany. We will bring back growth. We will end illegal migration. We will meet our security needs, especially regarding to NATO goals. So yes, that's a clear mandate for a change of policy.
A mandate for a change of policy. CDU lawmaker Jens Spahn speaking to Bloomberg's Oliver Crook at, of course, the CDU's headquarters yesterday following those election results. Germany's highest stakes election in years then, paving the way for a pivot to increased spending, potentially with markets predicting the end of an era for constrained fiscal policy. But now the focus turns to the formation of a coalition government, which could, of course, take weeks, potentially months. Let's bring in Jeremy Stretch, G10 FX strategy head at CIBC. Jeremy, your reaction, is this a market-friendly result? And to what extent can the gains in the euro that we've seen in the session today be sustained?
Good morning, Tom. Well, yes, it is essentially a relatively market-friendly result. We saw that in terms of the euro's gains on the open after the exit polls yesterday. The market was obviously hoping that we would get that grand coalition, or at least most likely a grand coalition between the CDU with the SPD. That is seemingly what we're going to get. It was clearly the risk variable was always going to be the support of some of those smaller parties, and as long as only one got over that 5% threshold, then it was always likely that the euro would benefit. I guess the question is the issue of the debt brake, though, is probably going to be the caveat which will probably preclude euro from trading aggressively higher. So you've already mentioned about that 100-day moving average, and I think that could prove to be a little bit of a barrier as investors are perhaps slightly nervous to see how the new administration, once it's formed, will deal with that fiscal backdrop. But ultimately, it is a reasonably market-friendly outcome, and obviously, as I say, that's been reflected in the immediate reaction.
Yeah, really important that you bring in, of course, the question mark about the debt brake, Jeremy, given the two-thirds majority that would be needed to make a significant reform around that. What are the markets going to be watching then and monitoring in the days and weeks ahead? Is it how this coalition comes together? Is it commentary? What is going to be most sensitive, or what are markets going to be most sensitive to in the days and weeks ahead?
Well, one of the things, obviously, that was going to cause consternation for the market would be a result which was relatively unclear, and coalition negotiations which are going to prove long-lasting and very fraught. Now, if we are going to see a two-party coalition, it should be the case that those coalition negotiations should be, if not straightforward, but shouldn't last beyond the sort of Easter period, which, of course, Mr. Merz has been talking about. So if we can see progress over the course of the next few weeks, and of course the SPD perhaps need to look at its own internal structures and leadership, but ultimately we will look to see how quickly a coalition can be formed. If that can be put in place relatively quickly, then we won't have a protracted political vacuum in Germany, and of course that is necessary because I think the Eurozone needs strong political leadership at its core, particularly as we continue to focus on some of those external risks, in particular in relation to tariff dynamics.
Yeah, and I want to get your views on that, Jeremy. In terms of the time frame, then, we get past April, we still don't have a coalition. That's when the markets throw a tantrum, do you think?
Yes, I think so. I think if we get past the end of April and we're still in negotiation phase, if there's no real obvious sign of a process or a government being put together, then I think markets will become increasingly fractious and increasingly uncertain as to the outcome of the election. And, of course, we have to remember that we are talking about a government which is going to be two parties, yes, but the Alternative for Deutschland party will be the largest opposition party, and that in itself does create a little bit of uncertainty. But overall, it's going to be those coalition negotiations and whether there can be progress relatively quickly, which will be governing the market reaction.
Jeremy, do you have a view on whether or not this result makes Germany and therefore Europe more or less vulnerable to those tariff threats from the Trump administration?
Well, I think if you look back to some of those comments we had from J.D. Vance at the Munich Security Conference, and then clearly he was being quite critical of Germany in that particular context, or in terms of some of the narrative around Germany. So in a sense, the election result might raise the ire to some of those within the Washington administration. Does it change the dynamics in terms of tariffs? Probably not per se. I think the Eurozone is, of course, very much at a degree of vulnerability in relation to the tariff threat, because, of course, the US are particularly critical of the trade imbalance. So I think there is an obvious tariff threat which remains real, but I don't think necessarily the election itself changes the reaction function from the US, but it just underlines that there will be further pressure from the Trump administration, one suspects, in terms of that whole sort of political dynamic which Mr. Vance was clearly exposing and explaining at that Munich Security Conference speech.
Jeremy, further out with the debt brake, if they suspend the debt brake but don't reform it, what is Euro reaction to that?
Well, obviously, it's not exactly a positive outcome because, of course, the market would probably be hoping that there would be some degree of permanent suspension and amendment of the debt brake. A temporary suspension for 1 year would be encouraging, but I think it would limit the degree of upside. So I think it's very much the case that sort of those that are hoping for sort of 106, 106.5, I think will probably be somewhat disappointed if we're talking about just a 1 year suspension of the debt brake because of the lack of parliamentary support. So I think it probably does act as a little bit of a limitation, shall we say, in terms of the scale of the euro recovery narrative, because, yes, the market was hoping for a fiscal boost, but that fiscal boost will obviously be contained or curtailed if we're talking about just a suspension and not a wholesale repudiation of the whole German debt brake.
Jeremy Stretch, always excellent with the market reaction and that lens, of course, on the FX space. G10 FX strategy head at CIBC. Jeremy, thank you. Euro dollar currently up 0.5% at 1.05. Coming up, the Trump administration is taking aim at China with a volley of measures that risk worsening relations between the two rivals. We discuss that next. This is Bloomberg. Welcome back. So, US and European futures are pointing higher, but over in Asia, stocks there taking a bit of a knock. Let's bring in Avril Hong in Singapore for a check on those Asian markets. Avril, what is lagging across the Asian space right now?
Oh, it is the drag we're seeing from Chinese tech names. But to be clear, Asia stocks were already in a pretty bad mood. No thanks to Wall Street's performance from last week and how we saw its worst showing among US stocks so far this year amid weak, lackluster US economic data. So you're seeing that being reflected in the Korea Kospi, the Taiwan benchmark as well. Japan is on a holiday. But as I say, it's really about Chinese tech today. And part of this, the board, is no thanks to what we're hearing from Trump, his most sweeping forceful action on the Asian giant in his second term. And these measures that could mean we see US investments on Chinese tech being curbed and vice versa. If you can just flip the board, you can take a closer look at how the Hang Seng Tech is faring today and how this is really the drag on the indices. But what's really interesting as we hear how the likes of JP Morgan say, this stock rally in China could face the risk of a reversal given this resurgence in US-China tensions. We're also digesting how Alibaba's investment plans for the next couple of years is massive. The property stocks are doing well today, a bit of a rotation going on.
Avril Hong in Singapore with a check on the Asian markets. Bit of pressure there. Plenty more coming up. Want to focus on Ukraine. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in Berlin. These are the stories that set your agenda. Germany's Conservatives win the federal election, with Chancellor Olaf Scholz's party suffering its worst defeat since the Second World War. CDU leader Friedrich Merz says he'll form a coalition quickly to get the economy back on track.
The world out there will not wait for us, and it will not wait for lengthy coalition talks and negotiations either.
Trump's China salvo. The US president targets Beijing's spending on tech, energy and strategic sectors, all with the aim of cutting China's trade surplus. Plus, Donald Trump's top advisors decline to describe Russia as the aggressor in the Ukraine war. Volodymyr Zelenskiy says he would step down as Ukraine's president if it guarantees peace and NATO membership. So, checking the markets with, of course, the election results out of Germany firmly in focus. The euro is higher on the expectation that you get a grand coalition between the Conservatives, the CDU, who came in first, and the SPD, the Socialists, who came in third. That is the market expectation at this point. Of course, there are potential wrinkles going forward in terms of how those coalition talks continue and go ahead, and also question marks about whether or not this is a coalition, if it comes to pass, that can reform the debt brake and get the spending that many say is essential for Germany's economy and to revive this economy. Euro-dollar at 105, getting 0.5%. DAX futures pointing to a solid session as well. Still, of course, at record highs, looking to build on that, gaining more than 1% in the session. Bund futures pointing a little lower on expectations, of course, that there could be more spending. Gold trading at 2,940, closing in on that 3,000 level, up 0.1% for the yellow metal. Now, Germany's CDU-CSU coalition, or partners, they were the clear winner in the weekend's election, putting its leader Friedrich Merz in line to be the next Chancellor of Germany. But with European security and the balance and defence spending top of mind, what does his win mean for the country and the wider continent? Here with the details is opening trade anchor Kriti Gupta. Kriti, talk to us about the top issues, the inbox for this likely incoming Chancellor, Friedrich Merz.
There is a long laundry list of things that he has to tackle. The very first topic is how to spur economic growth. Germany has lagged that recovery that we've seen in so many other countries when it comes to the COVID-19 pandemic. You've seen a lag broadly in Europe relative to the United States and China, but Germany especially hasn't been able to come to the forefront. That's crucial because, of course, they benefit from a cyclical turn in the global economy. So we're seeing this outperformance everywhere else and not necessarily in Germany. That's the very first thing on his agenda, and that's going to be reflected in the wages German citizens get, in the kind of jobs stability as well. We've seen layoffs across this country in various sectors, from the auto space to the banking space, really just a lot of corporates trying to tread water. So that's number one. Number two is going to be investment, of course, as well, specifically in the defense infrastructure. Friedrich Merz is going to have that debt brake kind of feed into that conversation, especially as we have Donald Trump in the United States have a very tough stance on Europe, tougher than his predecessor. In yesterday's elephant round, where a lot of the party leaders basically came and spoke to each other, Friedrich Merz very specifically said he wants to grow Europe, grow Germany for independence from the United States. Fighting words from the soon-to-be German leader. And this is crucial as well, because not only is he going to be dealing with that internationally, but domestically also dealing with an immigration story. That, of course, was one of the key voting issues this time around.
They were strong comments, weren't they, from the likely incoming Chancellor Friedrich Merz about the US and trying to remove that dependency. I was at the Green Party event last night as the votes came through. They reminded me, speaking to people on the ground there, that this isn't a US and this is a Trump administration that has, and I'm quoting them, meddled in German politics. Talk to us about that relationship between Germany and the US with the rewriting of the political landscape here.
I mean, you saw it in the AfD, of course. I think that's the most clear read-through, with Elon Musk initially speaking about the AfD and the politics and what they stand for, especially on their immigration stance as well. You also had the likes of J.D. Vance make those comments in the Munich Security Conference, which, again, not only shocked all of Europe, but specifically right here in Germany, because that wasn't the expectation and the policy stance that a lot of Europeans and Germans saw from the United States. So a real 180 on that front. But I have to say, I think the biggest, maybe shocking point might be the military story, because, of course, we know the United States has a major military presence here in Germany, something that Donald Trump has talked about removing on the campaign trail altogether. That would be something that defense strategists in the United States have pushed back on. It's also something that's being talked about at the CDU, for example. Friedrich Merz has been speaking about it on the campaign trail, as well as in the elephant round. But our very own Oliver Crook as well spoke to a CDU lawmaker. Take a listen to what he had to say about that relationship.
We do have a very clear mandate. Friedrich Merz will be our next Chancellor in Germany. Olaf Scholz is done. And that's the good news of tonight. And we're going to change course of Germany. We will bring back growth. We will end illegal migration. We will meet our security needs, especially regarding to NATO goals. So yes, that's a clear mandate for a change of policy.
He's talking there about changing the NATO goals, but I should talk about another realm of security that's really important. That's the energy crisis. We were talking about the laundry list of Friedrich Merz. So it's not just national security and the defense infrastructure. And that's where the SPD's Boris Pistorius is a really key figure, not just in terms of coalition talks, but in terms of what the military infrastructure of the country actually looks like. The other piece of this is going to, of course, be energy infrastructure as well. And if you talk to the folks, the politicians here in Germany, so much of that relationship with the United States is based on LNG exports. 93% of German LNG imports come from the United States. At the same time, they're trying to bring in electricity from the likes of Norway and France. So this is very much a sticking point, that dependency as a function of the war in Ukraine. That's what they're trying to clear up as well.
Yeah, Boris Pistorius, the defence secretary, as you say, defence minister, currently one of the most popular politicians in Germany. And the speculation, of course, he could take over from the socialists, lead the socialists, take over from Olaf Scholz. We'll see if that comes to pass. You talk about the defence spending needs, and Boris Pistorius has lent into that, of course. That, on some arguments, would depend on reforming the debt brake. There's other ways to get money into defence, but one clear way would be to reform the debt brake. What should markets be thinking about regarding expectations on the debt brake in the days and weeks ahead?
Well, right now you're seeing a little bit of optimism in German-related assets, and that might simply be an overhang that is being removed from the markets around the election risk as well. That being said, the SPD and the CDU together, CDU-CSU alliance together, do not have the numbers they need to reform the constitutional debt brake. They need a two-thirds majority. They are falling short of that. So at some point, they do have to get some of the other parties on board, whether that is the far right, whether that is the far left as well, or even some of the smaller parties, the Greens, for example, or the FDP is no longer an option. Christian Lindner, of course, resigning last night, basically saying he's done with politics. But this is going to be the next barrier here. They can, however, talk about an emergency law, talk about carve-outs. They've done that in the past. Boris Pistorius at the helm of those kind of carve-outs of saying, here's the exception to modernize our military. But that's also going to be a key point. The defense story and the debt brake story, of course, as you point out, very much intertwined.
Kriti Gupta, opening trade anchor, of course, with the details and the analysis on these German elections. Thank you very much indeed. We're going to have a great lineup of guests to help us unpack these election results. Many of them will be falling into Kriti's show, of course. Yari Stead, Chief European Economist at Goldman Sachs, will be with us at 7:30. A fantastic voice, of course, on the economic outlook for Germany and the Eurozone on the back of the changed political landscape here. Later in the morning, we're going to hear from the IFO president, the IFO Institute president, Clemens Fust. We're also going to be hearing from DIW president, Marcel Fratscher. Now, today marks, we've been talking about defence, and that, of course, ties into what's happening with Ukraine. Today marking 3 years since Russia's full-scale invasion of Ukraine. And yes, it was Russia who was the aggressor, and yes, it was Russia who invaded Ukraine. And as European leaders head to Washington this month, are we finally seeing some movement to bring an end to the conflict? On what terms, of course? Over the weekend, President Zelenskiy said he would be ready to step down if it were to guarantee peace and NATO membership for Ukraine.
To achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Let's bring in at this point from Warsaw, Bloomberg's Piotr Skolimowski. Piotr, President Macron meeting with President Trump today. How important is it that the EU present a united front, and are they likely to be able to do that?
Indeed, it's very important. As you mentioned, Friedrich Merz earlier, talking about how they will need, or Europe needs independence, or Germany needs independence from the US, because obviously the type of rhetoric that we're getting from the U.S. at this point about Ukraine is really, really worrying for Europeans, and they're trying to get their act together at this point. We're going to have a foreign ministers meeting of the EU today. They're likely to discuss a new package for Ukraine worth 20 billion euros. Separately, as you mentioned, Emmanuel Macron is heading to DC. Then Keir Starmer, UK Prime Minister, will be also meeting Trump later this week. The idea here is to push for what we also reported, the so-called reassurance force that would potentially could be sent to Ukraine as part of some kind of a settlement. But obviously, at the end of the day, it will still need a U.S. umbrella or some kind of a U.S. involvement so that the assurances that will be provided will be credible. So we're seeing movement from Europeans, but obviously filling out this gap that it seems U.S. is going to leave behind in supporting Ukraine. It was a major supporter. It continues to be, will be very, very tough.
Piotr, over the weekend, and we mentioned this, Zelenskiy, we played the sound, Zelenskiy offering to stand down in exchange for peace. We know this is what Moscow wants, this is what Russia wants. Is it also what Trump wants? Is it also what the US wants?
Well, obviously his comments should be read in the context, as you said, of what Trump said, that we had this pretty bitter exchange last week where Trump accused him of, basically called him a dictator without election, wrongly said that he had only 4% support. So obviously Zelenskyy is trying to blunt those comments, saying, okay, I mean, if you want me out, which is basically what these comments amount to, then I'm ready to step down. Obviously, the idea for Ukraine to hold elections at this point or getting rid of Zelenskyy is probably unlikely to happen. It's more rhetorics than the reality. He still enjoys a lot of support. Actually, his support, according to the latest polls, is actually bigger than Trump's in the U.S. So he's there. He's still the leader. And what we've seen since those comments came through from Trump is that that the nation is rallying around him, even though his support has obviously been falling. So that's where we are at this point with Zelenskyy and Trump, and his willingness to kind of lead his country onwards.
OK, Bloomberg's Piotr Skolimowski in Warsaw, as, of course, we mark 3 years since Russia's invasion of Ukraine. Now, to some other stories making the news this Monday. Several US government agencies have advised employees to ignore, for now, a demand from Elon Musk's government efficiency office to justify their jobs or face dismissal. The Trump administration started sending emails to more than 2 million federal workers over the weekend, ordering them to report on what they accomplished last week. The deadline to reply is just before midnight on Monday. Berkshire Hathaway's operating earnings surged 71% in the fourth quarter, driven by higher interest rates and a recovery in its insurance underwriting business. Meanwhile, the firm's cash hoard grew for the 10th quarter in a row to a record $334 billion at the end of 2024. Pope Francis remains in a critical condition for a second day as he continues to battle severe pneumonia. The Vatican says the 88-year-old pontiff is still receiving high-flow oxygen to help with his breathing. Some blood tests show an initial mild renal failure, which is currently under control. The Vatican says the Pope continues to be alert and well-oriented. And researchers at the Wuhan Institute of Virology in China say they've discovered a new coronavirus in bats that enters cells using the same gateway as the virus that causes COVID-19. According to the journal Cell, the finding raises the possibility this new virus could spread from animals, though it has not been so far detected in humans. Coming up, Prosus and Naspers agree to buy Just Eat Takeaway for €4.1 billion. We're going to digest the deal with an exclusive conversation with the CEO of Prosus and Naspers. That is next. This is Bloomberg. Prosus has agreed to buy Just Eat Takeaway for €4.1 billion in the technology investor's biggest deal to date. Let's cross over to opening trade anchor Anna Edwards, who is standing by with the Prosus and Naspers CEO. Anna.
Thank you very much, Tom. Yes, absolutely. Let's bring into the conversation then the CEO of Prosus and Naspers, Fabricio Bloisi. Fabricio, thank you very much for joining us so early this Monday morning with this conversation. Let me ask you about what it is that draws you to Just Eat Takeaway. Why are you doing this deal?
Good morning, Anna. Pleasure to be here with you. Look, we are very excited about what we are doing. We really believe that Europe needs investment, needs growth, and needs innovation. We really believe we can do much more on technology in Europe. And that's a little what's behind this deal. Just Eat is a leader in food delivery here in Europe. Just Eat has many markets that they are doing quite well. But together with Prosus, as you know, we have many food delivery businesses around the world, including iFood, one of the best operated food delivery businesses in the world. We believe we can invest here in Europe to get artificial intelligence, innovation, more people here in Europe try to be in the frontier of technology and innovation. So we are quite excited about that. We believe we can not only create a big European leader, but a big global leader based here in Europe.
And Fabricio, you join us on the day where we're busy digesting a lot of political news flow from Germany and a lot of people asking questions about how Europe drives forward its economy. Is this deal a sign of corporate confidence in Europe's potential?
Exactly that. Europe needs to change your mindset to growth, to lead on innovation. And that's what Prosus believes. The biggest food delivery business in China, for example, is a $100 billion business. In the US, more than a $100 billion business. In Europe, we don't have many big e-commerce or food delivery companies. We believe it has to be different. And we need us, the corporations based here in Europe, to take the risk to invest for that. We are investing not only a lot of money, but we are investing in technology. That's what I keep saying. To lead for the future, we need the best AI companies in the world based here. So our confidence is higher that we will have a turnaround in how Europe sees innovation growth, and we are ready to invest for that.
OK, and you said in January, Fabricio, that you had $20 billion to spend. You were ready to grow in Europe. You're spending a bit of that today, a large amount of that. Do you still have appetite to do deals in Europe after this one?
Right now, I'm focusing in talking about this deal today, in delivering growth with Just Eat. I think it's a good start. You can see that we are committed to invest in Europe. As I said we have $18 billion in cash, and we will invest more to lead the world in innovation. This is a big first step here in Europe. We are going to keep doing not only acquisitions, but investing in disruptive innovation. And I think this is what Europe really needs now. And we have the capacity to keep investing on that. And we have the people. And together with Just Eat was one of the pioneers in food delivery. So we are ready to make Europe become pioneer and lead on innovation again.
OK, and are you convinced that the price is right for this deal then, Fabricio? Because there have been deals done in this sector that in hindsight look as if they were overpriced. I mean, some that Just Eat Takeaway did themselves, for example. Are you convinced this is the right price?
I think the price of Europe as a whole is the problem. Many of the technology companies in Europe, they should be valuing more and they should be investing more. So I think this is the right price for the Just Eat shareholders because we're paying a good premium. But at the same time, as I just told you, the leader company in China is a $100 billion company. The leader company in the US is a $100 billion company. We are investing in Just Eat at the right price based on DCF. This is the right price to create a real big global leader. And there will be also good returns for Prosus because this deal is more than investing in Just Eat. It's Just Eat plus Prosus' capability of innovation on investment and growth is going to generate a much bigger company. We are really confident we can build it together with Just Eat.
OK, and are you concerned at all about competition? It's a very competitive market that Just Eat Takeaway operates in. Some are worried about saturation in some of the developed Northern European markets that it has exposure to.
I think this business is only beginning. We are talking about food delivery. People eat 3 times per day, 30 days per week, per month. There is much more opportunity to growth. I want to remind you, iFood, one of the businesses we operate here in Prosus, is growing 30% year over year. doing 115 million orders per month only in one country. I think we have a lot of opportunity to grow. Obviously, we have competition. It's part of any company life. But the secret here is have the best people and invest a lot in technology innovation. And I think together with Just Eat, we are going to be a global case in terms of growth and innovation.
OK, Fabricio, thank you so much for joining us. Fabricio Bloisi, the CEO of Prosus. Tom?
OK, Bloomberg's opening trade anchor Anna Edwards with that exclusive conversation on back of that $4.3 billion, €4.1 billion deal taking over Just Eat takeaway by Prosus. Anna, thank you. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Yes, the political landscape has been rewritten here in Germany. Here's the maths then. 316 seats required for a majority. You have the CDU-CSU. You combine with the SPD and you have enough to get that majority. That is the grand coalition that the markets are hoping will transpire. They do not need the addition of the Greens. The AfD, best performance in that party's history, the far-right party, of course, they will be the main opposition. We'll see if this is the combination that comes to pass, but certainly the potential incoming Chancellor Friedrich Merz says he wants to act and act quickly on that coalition discussion. Let's flip the board and have a look on how the euro is performing, because there's an assumption that that is the picture that we're going to be getting. Certainly that's the picture when we look at the moves in the euro. The euro is gaining, the single currency, but it is rubbing up against the 100-day moving average, which we know is a resistance level, a little above 105. And this takes us to the granularity of the conversation, the debt brake. If you get a reform of the debt brake, you need two-thirds majority. They do not have, the mainstream parties yet, that two-thirds majority. That could cap the moves higher for euro. So just bear that in mind as we see gains in the session of around 5/10 of the single currency today. We'll flip the board and have a look at the mid-caps in Germany, because they've underperformed and could be best positioned to perform well if we get confirmation around the coalition and if we get reform to that defence, that debt brake. And that is key if, of course. So the mid-sized companies have underperformed. They have about 40% of the revenues come from the domestic economy versus the DAX, where to 20% coming from the domestic economy. The DAX is pointing higher in the session today. You can expect the mid-caps to do well as well, but will that be sustained? That's going to come down to the conversations in the days ahead around the coalition. Let's flip the board and have a look at defence, because those defence stocks have had a storming 12 months. And year-to-date, Rheinmetall itself, just Rheinmetall, is up just year-to-date around 45%. So again, it comes back to the conversation about how much money they can put into defence. There does seem to be consensus on the need to build out the defence base here in Germany. That could be positive for these defence stocks. We've got a great lineup of guests to continue to unpack the election results here in Germany. Yari Stem, Chief European Economist at Goldman Sachs, at 7:30. Later in the morning, the IFO President Clemens Fuest. The opening trade is up next. This is Bloomberg.